is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Sam in Irvine, California. Hey, Sam, what's going on?
Hi, Tom. How are you?
Doing great. You having a good day out there?
I am having a great day. Thank you very much. I want to preface by saying that I'm so grateful to you and TFNN for you to assemble such a great people, such a team to help the small investors like myself.
Well, we appreciate you growling and prowling out here with us, Sam. Thank you so much.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. I got my man, Mr. John Logan, beside us out here today, folks. He kicks us off every day, 8 o'clock in the morning. It's a beautiful thing, man.
Yeah, we had a good show this morning, and I stayed on for years after that, so it was...
That's right.
It's a good time.
There's no time for rest, man. It's a beautiful thing. Let's take a look. This is a quote by Duke Ellington. A believer is an optimist who thinks of tomorrow. Market-wise, let's take a look at it out here. We have the Dow down 64, NASDAQ off 11, S&Ps are off 6.5. Gold contract down 350, traded at 1,201 an ounce. Silver flat at $16.31 an ounce. Platinum down 3 at 1,163 an ounce. Copper flat at $2.59 a pound. Light sweet crude getting smoked again. Down $1.51, $49.30. That's the barrel. Bonds, and John and I are going to talk about bonds as soon as I'm done with this update. 10-year up 18 ticks, 127.31. 30-year up 1 full point and 8 ticks, 145.09. King dollar up 335 ticks, trading out at 95.67. The euro is down 50 at 113, and the yen is trading down 14 at 118.88. Our phone number is 877-927-6648. It was called, folks. Want to know what's going on in your world. In the world of the markets, folks, we get a flat market. I mean, the Dow's down, but the bottom line is that you get a flat market out here. Well, first off, welcome to beautiful Clearwater, Florida, man.
It's good to be out of the snow and the freezing rain and all the other things that go along with zero weather.
And what's amazing, you don't get a lot of weather like that in North Carolina.
You know what? That was stunning to see that happen.
Yeah.
Zero, less than zero, actually.
Yeah.
It's just incredible.
That's no doubt. So we're going to go right to the bond market first, folks. And the reason being is that, you know, if you haven't test drove the TAS market scanner yet, profile scanner, you can come over to our website at TFNN. You go under newsletters first, then go into services. John has an amazing piece of software, and it sets up the profiles. And one of the largest trades that have been on since 1980, no doubt, is bonds. You know, yes, folks, you heard that correct. It's been in a bull market since 1980. Every analyst that you find that comes on CNBC and says you never make money on bonds, and there was hundreds of them, and there always have been, it's like, oh, really? Check it out, folks. It's like sick. But anyway, that being said, what bonds did do last week is that they came off the high, and, you know, as they were coming off that high, it's like, oh, man, okay, is this really going to be it? Meaning that, you know, because on a technical feature, that's how the market's been set up since 1980. On a fundamental feature, which is absolutely amazing, is that who would ever think that rates would actually go down for 40 years, which they have. Let's see, 30, 1980, 35 years they have gone down. That's the bottom line.
And whoever's tried to pick a top has just gotten crushed. Crushed. And you said something the other day that was really interesting. Like, you kind of quickly saw it in 2009 that, you know what, this ain't happening.
And yeah.
This pullback's not happening.
What happened is that, you know, technically it looked like it was going to, you know, get set up, and then it's like, no, it's not going to happen. And then looking around the world was really the heads up, because around the world still, folks. Okay, this is you have to take this into consideration. Around the world, if we look at France, they're paying 0.6%. We're at 2. Germany's at 0.3. Sweden, we'll leave Sweden out of it. That's 0.6, but that's Spain Spain is at 1.4. Italy's at 1.4, and we're paying 2. Like,
how is Spain?
Europe's getting overrun, man.
How?
Europe's done. Europe's done. Okay, that being said, but what did happen last week is that as we're coming off these highs, you had some juice on the way down. It was still lighter than how we went up. And it's like, okay, man, is it really going to be done? Because the Fed, has come out and said, hey, listen, we're going to back off a little, but we are going to raise these rates. So now we're going to go into the scanner, okay? Because what the scanner has done here, John and I were doing this program this morning together, and what happens in the scanner, folks, is that you have a 60, 240, a daily, and a weekly. And what you're looking for is we're looking for profiles that line up. And bottom line is that, no doubt, guess what? As soon as the market has pulled back a little, and we're not talking a market that's down today. I mean, it is down, but it isn't down, right? I mean, give me a break, okay?
Yeah.
It's sideways. I'd consider this a sideways market. But guess what? Someone is in there buying bonds again. And they were buying bonds right at the inflection point, right?
Yeah. Let me show you that?
Yeah, please.
Okay. I had the scanner up. We're going to talk about that in a second, some of the things that are going on with the dials up top that you like to call them. But we're going to look at the 30 year.
Yes.
And this is still in the March contract right now. And we talked about, this may not be over.
Right.
As far as the run up in bonds and notes, and considering what you just said, how is Spain's interest rates ungodly lower than ours?
Right.
I mean, with the stuff that's possible over there. Just like Greece. Look at what's Greece at now? 13, 14, 15?
Yeah, Greece is good. Well, let's go see. Greece
Spain's not Greece, but
Greece is it's not that bad. 8.9, and we know they're broke.
Okay, well, that's all. Oh, wait, what's that on? What year is it?
That's the 10-year.
That's the 10-year. Okay.
8.9.
Okay. All right.
So watch this though. On a percentage basis, check this out, folks. On a percentage basis, Germany's at 3, so we're 6 times higher than them, right? Spain is only 4 times higher than us.
That's crazy.
Yeah,
that's
exactly.
crazy. All right, so the 30-year, we were talking on the shows, and you and I have been discussing this, that, let's try to find a major area to wait for to let this come to us.
Right.
Now that it started breaking down on the intermediates, on the dailies, and that started happening back at 149.04 on February 5th. Went back and retested. Then we don't have anything to hang on to here, and there's no reason to try to step in and try to buy anything yet.
Right.
Obviously, it was a good time to short, but I've been terrified to short any type of treasury, so just might as well wait for a big time support area to pop up to buy. Alternatively speaking, and this weekly inflection point, we hit last week. We bounced around there a little bit, a couple of ticks in the below area of this profile, but lo and behold, we talked about this at least being a target for shorts, but in the long-term trend up, taking a look at this as a buying opportunity, and that's exactly what's happened now. So,
And what we've had today, folks, is that it's rejected lower price. It hit the 144.03. Right now, you're at 145.08. Okay, and that is a huge move, no doubt.
Yep.
And it's not going to take much as the profile hit the profile. Came off the profile, so now the key is going to be, okay, what type of follow-through do we have with the 30-year, particularly getting over the 146.04 going into this 147.10?
Yeah, I mean, I think your range is pretty well defined here. It's 144 and some change up into 149.
Right.
And the cool thing is that since we have a closing bar now and we're orange, and we're saying by that color and the close, we're predicting that there will be a new balanced area, a new profile appearing tomorrow morning.
Okay.
And then we'll have some new inflection points to key off of that may be a little better range than 144 to 149. And that's the cool thing, because we need, that's a 5-handle range. I mean, that's a big move to get up there. So now we'll have some new battle points, if you will. So. And
what I've seen is that the weekly breadth statistics on these and the weekly profiles are pretty intense, right?
That's another thing that, I mean, we've talked about this till we're blue in the face, but here's our speedometers up here, and we've talked about.
And if you're in your car right now, folks, we're looking at 4 speedometers, literally, and they're marked in red, blue, green. And the red, of course, is that they're going south. The blue is neutral, and the green is basically positive.
Yeah. So as these S&Ps are gauged by our own proprietary market breadth based around the imbalances or balances of those profiles within those underlying instruments of the S&P 500, it gives you an idea of how to look at the market in a way never seen before based on the underlying instruments causing a new breadth to unfold. And we'll talk about that.
You stay right there, folks. Right. John Logan, Tom O'Brien, appreciate you growling and prowling with us. The Dow right now is down 16, Nasdaq's off 9.5, S&Ps are off 5.5. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. John Logan, Tom O'Brien. Appreciate you growling and prowling with us out here. Right now, you get the Dow down 58. NASDAQ is off 9. S&Ps are off 5.5. And the bottom line, as I said a little bit earlier, this is really just a sideways move out here. Let's go to Dave in Canada. Hey, Dave, what's going on?
We're just wondering, in regards to your bull run you traded on Friday. It was the Euro-US bull run happened around 10 o'clock on Friday morning.
You mean the bull bear binary option hour, right?
Yes, sir.
Yes.
And if I understood you there, you went and sold before the run took off.
It was buying. I normally always sell them, but then in that case, that was buying the euro, right?
Oh, you were buying the euro. Okay.
Yeah.
Short term.
Yeah, it was weird. On Friday, folks, at 10 to 11 Eastern Standard Time, we do the bull bear binary option hour. And what I was explaining is that if you're buying, or selling, you're trying to sell or buy as close to the bottom of the box, the top of the box, as that you can. Go ahead.
Okay. Try to buy as close to the box as possible?
That's correct.
Then you're referring to a spread, right?
That's what we were trading. That's correct.
Oh, you were trading. Oh, okay. I was trying to figure it out here, and you were trading a binary.
It's a spread.
Oh,
what happens with the what I've found is this: if you're trading an 8x product, inside the 4x part of it, the spreads. Yes. I mean, what happened is that spread, what was an $8 risk, right? Right. So what ended up happening is that it was very, now what you had here, folks, if you're listening and you haven't heard the bull bear binary option hour before, it was a very short-term trade because the trade itself was only going to be good for like 45 minutes. So the option, it's a spread option. That's what you're buying. And what ends up happening is that the box that we're referring to is at the bottom of that box is that if it went under the bottom of the box and you were wrong on the deal, you only could lose $8. In order to be right on the deal, it had to actually come in, remember, it had to come in 6 ticks up because that's what the spread was, right? To come in the money.
Mm-hmm. Yep.
And then the other side of that spread, folks, was saying that when you risk $8, you can make 92. But I was explaining on the air also that there's no way you're going to make 92 that quick because that had to go to 114. Now, the sickest part is that it did end up going to 114, but that didn't go to 114 until the afternoon. But anyway, but it did go to 65, okay? So, and the reason I had done that, if I go long the euro, what I'm doing is that I'm looking at the dollar index on the other side because the dollar index actually has the contract value on it. Mm-hmm. So that's how I basically was looking at that trade.
Oh, okay, cool. All right, okay. Then I understand that spread. Okay, I had understood that was a binary. But wow, how in the world did he pull that one off?
Yeah, no.
Okay, cool.
I would if you're trading the forex product in there, I would be doing the spreads, and the key is sitting there waiting until they get to the bottom of the box or the top of the box, because at that point, what does happen and has been happening quite a bit between the dollar and the euro is that you're getting big moves. I mean, the dollar is trying to take out the high of the last 7 trading days and hasn't been able to do it.
Right. Yeah, I've watched 3 different videos what Daryl has done, Daryl Martin.
Yes. And
he did a binary straddle where he went and sold on one side of the market and bought and created himself a. I forget what it was. I think the risk was
a strangle. Yeah,
a strangle. Does he always sell as expensive as possible and buy as cheap as you can? Right.
I don't.
It's a general concept.
Yeah. That would be the concept, I guess.
Yeah. Sell as much as you can, buy as little as you can.
Yeah, and if you have that expire in between your sell and your buy, then it won't turn out very good. But if it's got to move out of that straddle in order to be successful, correct?
That's something that you want to ask him. I mean, what my gig is, and I wish I had the exact answer for you, but what my gig is that I like trading the swing points at the bottom and the top of the box, and that's it. Yep. You know what I mean? But when he's on Tuesdays, Thursdays, 1 o'clock, give him a call.
Okay.
Okay, man. Have a great one.
Thanks, Tom, but now it's all clear as mud. I bet it was a spread. Cool.
Yeah, no, and listen, if you trade, it's also good. Trading oil, I've found with the spreads really works well too, because it has to do with the premiums that are in there.
Yep.
You know what I mean? And
right.
and in both of those cases, the premiums stay pretty small.
Okay. Yep. Right.
Have a great one, man. Have a safe one. So let's go back to what I'd like to do is we'll go back to the bonds again, right? So that we can show them the different breadths that are out there, right?
Yeah. What really has been the norm since 1980, for the most part, on a very long-term basis, is, the market's obviously gone up. Notes and bonds have gone up over that time frame, but on the very intermediate to short-term basis, especially since 2009, is market goes up, bonds and notes go sideways at worst in a range.
Yes.
Maybe taken down a little bit. But as the market ever comes off of all-time highs, seemingly the bonds and notes shoot straight up. There's no mystery to what I just said. But as we look at these speedometers up top, what this is doing, this is the S&P breadth. We've got the Shanghai in here, Hong Kong, NASDAQ, Eurostoxx 50, other usual suspects globally, the Nikkei mainly, which is 225 stocks. It's a great sample set. But as we look at our S&P 500 breadth, I've used this as a guidance system since we developed it to look at bond trades also around those bond and note inflection points. So, for instance, if we've been breadth positive on the S&Ps and haven't shown any cracks like we started to show today, then that bond and note trade really is to be kind of laid off a little bit and waiting for that come to support area, because if we do have any foldovers in breadth, which is somewhat coincidental to the S&P action in general, but sometimes a very leading indicator, you can catch some really good bids in the bonds and the notes by using this to kind of work that strategy. And there's a lot, the bonds and notes are not they haven't historically been the easiest instrument to trade, as you know. But since this relationship has been in force,
right,
it's just be stupid and buy it, when you can.
Right.
When those battle points are sitting there.
So specifically what he's saying, folks, if you're in your car, right, we're looking at 4 clocks, and one's a weekly, daily, 240 minutes, and 60 minute, right? And he has the S&Ps up right now. So the correlation has been, S&P down, bonds up, bottom line. As bonds have pulled back, if in fact you don't see the S&P cracking at all, well, guess what? The bottom line is that bond is a screaming buy at that point.
Yeah.
Screaming buy, okay? The other correlation, of course, is that bonds are going down. You start seeing the S&P crack a little. Guess what? You just sit and you wait. That's it. John Logan, Tom O'Brien, you stay right there, folks. Our phone number is 877-927-6648. Dow's down 55, Nasdaq's off 8, S&Ps are up 4.5. We're going to be right back.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow Industrials right now are down 52. You get the Nasdaq off 6.5. S&Ps are down 4.5. Let's go over that oil contract. So oil right now, folks, 49.14. let's see, we got CLJ5 we're dealing with. So this little baby, we've done 444,000 contracts today. You're coming after the swing at 48.93. Yeah, this is going to crack again. This is crazy. So 231,000 contracts are down at that low. So this is going to get... let me go look at the XLE, because you know what has happened, and I was listening to your program, there's no doubt. you got that XLE off the bottom, man, and that is it looks like it's building cause. I mean, so the divergence, folks, would be like this. Oil wants to go back to that lows out there. The XLE is hanging in there really good, like,
It could give it up.
Yeah, but it's basically hanging in there pretty good. That what I would do with an XLE is that I suspect it's going to try to test 73 and you're at 80. But if you tested that with light volume, that'd be a nice setup, man.
Let's just say crude oil stays in a range.
Okay, right.
And let's say it's bouncing between 46 and 52, 53.
Right.
Which everything there's a lot of.
That's easy to do.
There's a lot of battles going on right now of who's right and who's wrong on the oil trade, right?
Sure. And
I think it's kind of been nice that oil's, in my opinion, held up in the face of every hedge fund on the earth saying they're getting short and this oil's going to $20. I love to hear that.
Right.
Right. Just like you like those contra statements too.
Right.
But as you kind of put that on the radar screen, as far as every time oil goes up, the XLE skyrockets seemingly.
Yes.
Every time oil goes sideways now,
or down, the XLE stays flat.
It hangs in there. So now on my screen and in the scanner,
okay,
you got 7881 as a new baseboard for this thing to kind of lean on if it's going to, and you can orient stops around there. And now you got some targets of 82 and even higher.
So with that, as it comes back to that lower level, that would be where you'd be buying it. You put the stop on the other side of it, and you're gunning for the 82.
You would hope it goes back there.
Sure,
You know
right.
what I mean,
right.
that would be the best case scenario.
Right.
Now, if you're still long, and we've been talking about this for 74, getting across the border of 74, and then hitting the gas pedal on the long side, and then using the profiles to regulate it up. If you're long, that's kind of be your intermediate kind of stop area. But if we get down in here, you could play around with some more shares of it at that stage. But remember, you can always get out and get back in. That's kind of the theme of everything we talk about all the time. And let me actually show you this.
Well, let's do this. So what happens also, folks, is that inside the scanner, so you do the indices, of course, you can do the sectors. Now I want to drill down into that sector. Let's pull up Exxon Mobil, XOM.
Okay.
So Exxon, folks, okay, is your largest weighting structure inside the XLE. And this is what you definitely want to wrap your head around. Depending what ETF structure you're trading. Exxon's 15.9% of the XLE.
I've got this sword still on. Hold on.
Perfect. So when I'm looking at Exxon right now, I'm saying to myself, this is interesting, man. Exxon almost looks like it not only wants to go after that low, we'll find out if that low can hold, but it looks to me that that's already at a lower range. So you can put these together, meaning, these couple tools together and say, okay, Exxon's 15.9% of the XLE. Mm-hmm. If that's going to go down there, well, you just sit there and wait.
Yeah, the neat thing about Exxon is it did provide some great pops.
Yes.
Especially
yeah, it
when
went from 86 to 94.
Yeah, especially when oil was making lower lows in XLE
right.
and Exxon Mobil were kind of hanging in there.
Yes.
And at the same time, and I can show you on the chart.
And look at that. See, now I'm looking at John Scanner. So the 60 and the 240 is negative right now, right?
Yeah. Yeah, it's starting to show a little cracks here. But if I pull up Exxon Mobil, and for people that are not looking at this screen, I'm going to pull up our dailies here. You first kind of had a no-no again today on the intermediate. So right now, but below that 89.50,
yeah,
and into that area you're talking about down below 86.95, we're kind of in no man's land down here. I don't see a lot of leverage on this.
Which is great to know.
Yeah. It's kind of like, there's not a lot of you don't have a lot of things to grab on down here yet. You have something to grab onto around that 86.95 area. It's called 87.
Right.
And then you've got breakout potentials above 89.50. But right now, we could just kind of mishmash around down here. And, that could be looked at as an accumulation area for longs, too. But I don't really, kind of looking at this from a broader sense, I don't like the way Exxon has acted lately, especially last week. We kind of caved in and closed really not that great. And
they had a pop in volume.
A lot of the other stocks in the XLE are showing a lot better relative strength, and I'll show you. We've got all the XLE stocks up here, and Exxon's, it could base down here.
No, which is really cool, because that's my point, folks, okay? That when you're looking at this, you want to understand what and inside these sectors, this only works at about, well, it works in all the sectors, but what happens is that when you have a weighting that is way more than the rest of the stocks in it, it's important to understand what the heck that is.
Without question.
Yeah, because you get Exxon and Chevron. Exxon and Chevron are the two largest weightings inside that little baby. And, you know, Chevron, I'm looking at John's scanner right now, is a mess going all the way across.
Right.
So that in itself, so there's, what? Let's see.
But
so,
interesting that the XLE is holding its ground in general.
No, I know.
Which means what does that mean? That, you know what that means? That means that the leaders of the pack are having a disconnect with the rest of the pack.
That's right.
And that rubber band's going to probably snap back at some point.
And that's 29%. Those two stocks are 29%.
That's amazing.
That is, isn't it?
That is amazing.
Yeah. I mean, what happens, the structure right now as we stand, folks, is that Exxon's 15.9, Chevron's 13. Then you watch this as you slide down. Schlumberger 7.1, Kinder Morgan, that's the pipelines, 4.4. ConocoPhillips 3.8. Then the rest of them, EOG 3.7. I mean, there's some action, but it's very minimal in the aspect of what you have there.
Well, you want to look at something alternatively speaking?
Yeah.
PSX.
PSX.
Phillips 66.
Oh, yeah.
All right. Now, if we go look at that.
Oh, the refining business. Interesting. Okay.
Yeah, this is in the XLE also.
Yeah.
And we are trying to figure out how to buy strength in a strong relative strength trade like the XLE. So
yes.
As we look at PSX, see how beautiful this is really on a long-term basis. We close above, we retest it a couple of times, we move higher. Now, this is, if you're looking at a relative strength trade and you're looking at that XLE relationship, we've been looking at this for a while, actually. But I hate to keep talking about the same thing every day sometimes. But you've got a lot of leverage points here to look at this particular stock and see that this is something that nobody wants to sell right now and everybody wants to own.
Right.
And, you know, it might not be late to the party here. The good news is you've got some stops you can orient around that 73 to 76 area. We're trading 79 now. We had a big day today, 3 points up, or 2.5 points up on a day where crude oil came down $1.50.
No doubt. And, you know, I guess that probably has to do with the crack spreads.
Yeah.
You know, because what you have here, folks, okay, their principal business is oil refining, marketing, and transportation. You know, so what does happen is that the crack spreads are absolutely crucial to that business, and more than likely they're opening versus closing.
Right.
Yeah, pretty intense, man. There's no doubt about it.
Yeah, there's other things to pay attention to on this grid. You know, I mean, there's actually, the cool thing about this too, and this is getting a little bit detail-oriented, is you see these yellow cells?
Yes.
Okay. These are indications that we're more than likely going to have a new profile appear, right?
Okay.
And as I look at the 240s, I'm seeing a ton of these new profiles appear, and we're already trading below profiles in some of the longer-term time frames. So let's just take a look at
and
one.
So here, let's talk about that.
Okay.
So you have an equity or an index that's trading below profile number one.
Mm-hmm.
Then we have on the 240 yellow is showing up. And does that mean that new profile what does that mean? That the stock's even getting weaker?
Without even looking at this, and
right.
I kind of look at this like they look at the Matrix in that movie now, like with all the numbers, with all the streams instead of seeing the video.
Yeah.
That means that a new demand area should be appearing on the next 4-hour grid. I know we're talking about shorter time frames for a lot of people out there right now, but it's just the principle of it. That may be somewhat of a floor that's appearing on a pullback in Anadarko. So without even seeing the chart on APC, I haven't even looked at it today. Let's just take a look at it. And those inflection points that we talk about are actually on the scanner itself. So if I mouse over Anadarko, I see those profiles, tops, bottoms, and POCs, which is the mode of that particular thing. So I hear the music.
John Logan, Tom O'Brien, you stay right there, folks. We're coming right back. Dow Industrials right now down 42. You get the NASDAQ off 2.5. S&Ps. Actually, the composite's down 2.5. The NDX 100, folks, is up 4.75. We're going to be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand for TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. John Logan, Tom O'Brien. Appreciate you growling and prowling with us out here. Don't forget, folks, every trading day, John kicks us off right at TFNN, 8 o'clock in the morning. We do live programming, 8 o'clock in the morning to 6 o'clock in the evening. You can get all that programming right on your cell phone, TFNN.mobi. We want to get Tiger TV. You happen to be driving in your car right now and wondering, what are we talking about when we're talking about visualization? Bottom line, folks, just go to TFNN.com and you're going to see the camera on the right-hand side. Well, actually, what you see a little box and we'll say mobile devices. Hit that. The TV comes up. It's a great picture. It's all HD. Pretty amazing. Dow right now is up 38. NASDAQ, the composite now is in the green. The NDX 100 is up 7. You got the S&Ps up, well, they're down 2. The bottom line is that I suspect coming into this close out here, what you're probably going to see, though, is that they're going to get it flat to slightly positive. We'll see what kind of juice they got coming into the close. If we take a look at the SPY, the SPY, the SPY has done 55 million shares out here today. The Qs have done 15 million shares. And the small caps have done 22 million shares. All, no doubt, anemic. But bottom line is that you have a market that is still at highs out here.
Quite amazing.
And John has this, so that inflection point, what we're looking at right now is an inflection point. Oh, that was from Friday, wasn't it?
Actually,
before it took off.
Yeah, we got to close above. We actually rattled around, met that 2082 area below on the 240 lows. But today, you know, from a long standpoint, this is kind of what you want to see. You want to see things gather themselves, build cars, as you say.
Yes.
And this is, you know, not the. I mean, the good news is that you've got some things to pay attention to on the short side, getting below, namely 2099.50 and closing below for starters.
You know, in that context, let's switch gears. I want to switch gears on you because I know I was listening to your program this morning and you were talking IBM. And IBM. You know, folks, you got to picture something inside the scan. The scan can scan whatever you want, but even inside the S&P 500, when the S&P 500, in fact, was just going to the moon, IBM was still a sell, which was a total mind blower. Because, you know, what happens is that you only had a few stocks, and IBM was one of them then.
Yes. Yeah.
I'm going back 3 weeks now, okay?
Yeah.
But the reality is that now the way this is trading here again, this bottom is wide open for a test again.
Right. And what I did is I put up IBM in the scanner, and I'm showing you, I just did a little search here just to pull it up without having to go through everything else. And as you can see, we're at the top of a profile on our daily, which we saw on the charts earlier.
Yes.
And we've we have drifted above some weekly profiles, and that I'm just going to kind of ignore that for a second because we were looking for a chance to get a riper area to short this.
Okay.
And now we've gone into that 163 area, 163.09, gone above it a little bit, and we talked about, hey, you know, lose a little, make a lot. Had to take a stop on that, but now that we're getting more than likely we're going to close below 163.09 on a day when the market looks like it's kind of gyrating and just kind of gathering itself to move higher, to be honest with you. IBM is showing some cracks again. That's exactly what you want to see. And as I pull up IBM, there we go.
It's below the profile now,
yeah,
right?
And we can now orient stops on the short side above there. If it doesn't work out, it doesn't work out. That's trading. But you know that you've waited until price has gone to a high probability area. You know the leverage from a relative strength standpoint on this stock is to the downside. And the scanner is going to give you all this information anyway.
Right.
Got a couple of cool new things going in that scanner, by the way. Those charts we just put in, which are going, I think, to make that a much more self-sufficient product. But we've also got our explanatory paragraphs, which basically tell the story relative to these profiles as you click on the instrument. It's going to be very cool.
And when we talk profiles, there's probably plenty of people that, yeah, I'm sure there are, because you and I, we're into the future market. Yeah. It's Stottlemyre. So talk to me about profiles in general.
Yeah, he's the smartest guy in the world, but he's what he created was a way to analyze the markets, organize data in a way that nobody had really done before, which was instead of like looking at volume is related to time.
Okay.
Volume related to price.
Okay.
So you usually have these volume bars relative to bars.
Yes.
On the top, 5 minute, how much volume was in this 5 minute section. So he took the volume and basically put it on its side and had it relative to price. And it was a very subjective viewpoint because you can look at these profiles and it's like a little bit of art to it. You can read into certain things. And what we did is basically take that concept, make our own derivative of it, and turn it into a very rules-based environment.
Right.
A lot of guys, you know, the Chicago Board of Trade put that out as a proprietary feed for a long time for like $60 a month just to be able to build those profiles.
Well, the first time I've ever seen it, you got to check this out, folks. So the first time I ever seen it, everyone had cards.
Yeah.
Cards were the deal. What are the profiles today,
Yeah,
right? I mean, everyone had their deck of cards, right? You know, and it was the profiles were out there. And if you didn't have a deck of cards, guess what? You know, you weren't in that pit. No, it's just really wild. You know, really understanding, you know, how this thing, is, you know, came together.
But you also had to kind of hand do all this, like you're talking about with the cards. And you also had to wait for the 30-minute close of the day to build that 30-minute intraday, you know,
technology
ABCD grid. Sure. And basically this does everything for you, automatically outputs the profiles on the time frames for you and generates from that algorithm of when we feel it's appropriate to look at the market with a new profile in place. And when I say profile, that means that you're looking for a new balanced area that you can determine where stocks or instruments in general are above or within or below that balanced area, and how to trade that with some kind of leverage based on some other things that we look at. Now, as you look at IBM, you know, this is noise in my opinion above this inflection point. But the good news is on it is, you know, if we're wrong, you can put stops oriented right above there and
because what has happened here, folks, is that IBM is really going to be going sideways since October 21st after that first leg down from 195 into the 166, hit a low out here of 150, and is having a real tough time getting above that supply area. That supply area is a monster, man. Yeah. That supply area on just a volume characteristic is 20 million, and we did 2 million today. It tried to get into, so think about that. It tried to get into a 20 million day with 2. Whoever has the 20 million probably has millions more left, and they said, thank you, God, and they just keep giving it to them. Yeah. I mean, that's the theory behind supply and demand. Pretty intense. Well, listen, man, it's always a beautiful thing. We love you being here. Love you kicking us off every day. You stay right there, folks. Dow Industrials right now will finish, well, they're going to be there down 32. NASDAQ is up 2. S&Ps are going to be flat. It's pretty wild. Bonds, 10-year up 19, 30-year up 1.7. We'll be right back, folks.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Robert in New Jersey. Hey, Robert, what's going on?
Hey, Tom. A great show.
Thank you so much.
For years. You got a great thing. I've been listening to you for over a decade. That's amazing. You've done a great job.
I appreciate it, man. Appreciate you growling and prowling out here with us.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great week, folks. This quote's by Walter Anderson. Believe in something big. Your life is worth a noble motive and effort and all of the above. Market-wise, let's take a look at it out here. Dow Industrials finished down 23. NASDAQ was up 5. S&Ps were flat. Gold contract down $2.80, trading at $1,202 an ounce. Silver up penny and a half at $16.33. Platinum down $2.20 at $1,163 an ounce. Copper flat at $2.59 a pound. Light sweet crude down $1.53, trading out of $49.28 a barrel. Bonds, we had the 10-year up 19 ticks at 128. 30-year up 1.8 ticks at 145.09. King dollar up 330 ticks, trading at 94.67. The euro down 48 at 113, and the yen down 19 at 118.84. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. What do we have out here? If we go over to the SPY, bottom line, you're at 211.20. That's over the highs. The high on Friday, well, it's over the whole consolidation. The consolidation, the top of that consolidation, folks, is 208.97. You did 71 million shares. Bottom line is that even the volume on Friday was light. Even at $1.40, you're at higher high. You can go higher. NASDAQ Composite. NASDAQ NDX 100 first. We look at the NDX 100. That was up $16 out here. We did 16 million shares. Was up 11 cents at 108.53. Gold. What do we take a look at the gold market? This is what we have with gold. What gold did out here today is this. You got down to 1190. You rejected lower price. We had light of oil, and we did 107,000 contracts. We're at 1201.90. What you want to see with gold, now gold was going into all the signs of strength from the last bottom that was established out here on the November 7th. So we had a nice sign of strength on the 7th itself. The 7th itself, we went from 32 to 73 in the gold market. On the 14th of November, you went from 48 to 93. And then the largest one out there, spread-wise, was December 1st. That's when gold got down to 1143 and ended up closing at 1221. That was a monster number. That's where we've been pushing into, and we've been pushing into that area with light of oil. Now, in order to get up into the larger range, gold's got to get into this 1216 area to 1228 would actually be better. 1228 is the number. What we did have out here this morning is this. There was divergence inside the metal market. The divergence that we had is that the silver contract itself had already been up. Gold, the silver contract was up 0.4% when gold was down 0.6. Bottom line, the silver ended up being the correct deal out here. Silver, we did 17,000 contracts out here. Rejected the low. Silver doesn't have as far to go to get inside the larger range. That would be, we're at 1633. You're dealing with the 1670 mark. Bonds, the ever-ready bond market, folks, once again has shown that, guess what? It does not want to stay at lower price. What is unusual on this move out here today is that the market was flat and bonds stopped moving topside once again. We did 1.2 million contracts inside the 10-year. The 10-year is at 128.01, and it looks like the 10-year is going to try to bust into this 128.15. It looks like it's going to make a run for it tomorrow. We'll see whether we make it or not. You get inside that area, and if we get inside that area with the steam that we did today, that's going to be higher price. That's going to say it's going after its highs once again. Big number. 30-year. What do we have with the 30-year out here? What we have with the 30-year is this. USH. 30-year bond, same type of setup. 30-year. Also rejected lower price out here last week. Today, you had juice come into the contract. We're at 145.09. Now, the 30-year really has to get back over. So it's like almost another 1.5. It's 146.19 approximately. You know, you're right off these highs. That's the bottom line. The strength that the bond market did have out here today, though, is no doubt pretty incredible. King dollar. Now, let's go over to King dollar, because what has happened with King dollar is this. King dollar, once again today, try to get up and over and into its highs. The last swing point on King dollar is 95.23. We made 95.02, sold it off again, closed at 94.68. When you take a look at this, that's been 7 days in a row that it's trying to get into the minor swing. The minor swing is this 95.23 that was generated out there on February 11th. The actual high of the dollar index right now is January 26th. That being said, which is wide open, is the February 3rd level. That February 3rd low is 93.38, and I expect that's where we're going to get into and trying to test. So whether you're a bull or a bear, this is a really tight consolidation that's happening right here after an extraordinary run topside in the dollar. Euro is just the opposite. So Euro is doing the same type of consolidation move, meaning sideways, from the same type of day, which would make sense because it's the euro against the dollar against the euro, whatever way you want to look at that. And it looks to me like the bottom line, euro is going to get itself bounce going out here. Our phone number is 877-927-6648. Some of the high volume stocks. Well, here, let's first take a look at what was the juice inside the NDX 100, because the NDX 100 was the strongest indice out here today. Discovery Communications. You had Discovery, the A equity go up $1.40. The C equity go up 83 cents, 80.34. Apple was the third largest mover. That was up $3.50. That's trading out at 133. Gilead Pharmaceutical, Gilead Sciences rather, was up $1.09, 90 cents at 104. Taken away from it. On the way down, you had Vipul Communications down 27 cents. Tesla was off $9.77 at 207. Citrix was down 185 at 63. And Wynn Resorts was off $4 at 154. Inside the Dow Industrials, what was putting juice inside the Dow versus taking it out? You had United Healthcare, that was the leader out there. That was up 3% actually, 2.5%. That was up 378. DuPont was up 79. You had Microsoft up 29, and Procter & Gamble was up 52. Taken away from it, Boeing was down 357. Let's look at Boeing. Boeing's been a rocket ship, so that's interesting. Yeah, 357 is nothing for Boeing being down because it's been up. It just has gone from 120 to 160 in 3 months. So that is not a big deal whatsoever. Intel was another one on the way down today, down 65 cents at 33.76. You had Caterpillar down 95 at 83.49, and ExxonMobil was down 91 at 89.01. The oil market. So when you do look at the XLE oil market in general, oil market down today. The oil was off 2.9% today. It's pretty amazing thinking that you're dealing with 3%, 4%, 5% moves every day in the oil market. It's just crazy, actually. Bottom line, you had an expansion of volume. You're at 49.31. The lowest swing point is this 48.93. It's going to go after that, and we'll see how it handles the lows. You know, thus far, last Thursday, you came down with some juice. So we did 554,000. Now, oil trades on a monthly basis, meaning month to month. They roll futures, folks. So what you do get, you get expansions of volume very quickly. That's what we did have there on the 19th. Bottom line, you get a lower price, though. Today, another expansion of volume. You're going against, once you actually get into this, it's going to get interesting. If we're only 20 cents, 49.10 is actually the high of the low. So we come down another 20 cents. That's where this thing's going to get really dangerous because the low there is 45. But, you know, you get into that bar. Once you get into that bar, you start moving into that bar that weakens that whole structure. This is Tom O'Brien. This is TFNN. Our phone number is 877-927-6648. The Dow right now is down 23. Nasdaq's up 5. S&P's are flat. We're going to be right back, folks. Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Check out the new look of Tiger TV. Now you can see all charts and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow Industrials were down 23, NASDAQ up 5, S&P's flat. And if we go take a look at the XLF, we get into the financial sector next, folks. What we're going to see here is this. The XLF, of course, which is the large financial institutions, right now we're trading out at 24.38. When we take a look at this, how this is set up right now, the high that was generated out here inside the XLF was going back in December, and that high is 25.14. we'll see if this is going to, if the market is going to, if the XLF rather is going to catch up with the market. The last swing high out here was on February 17th. That number there was at 24.57. Now, inside the XLF, Berkshire Hathaway is the largest weighting structure inside that. And if you do take a look at Berkshire, what we do have with Berkshire, Berkshire also hasn't got to its high yet. It doesn't mean that it won't. The Berkshire has been in a consolidation since the November 20th area. And of course, what does happen with the Berkshire Hathaway is that, yeah, Geico is a large part of their cash flow. However, Berkshire Hathaway is really just one large fund. And inside that large fund, there's a few of these equities that have absolutely got smoked. The largest one that I've seen thus far is American Express. You know, American Express went from a price point of $90, $95. That was out in December 29th, and we're trading at 80 right now. That is a gap away on the way down. When you take a look at the aspect of inside exactly how much Berkshire Hathaway owns, it is a mind blower. You know, like anything else, big numbers on the way up are great. Big numbers on the way down are just a killer. And this case, if you want to do some math, you can basically take $14 or $15 away from 151 million shares, because that's Berkshire Hathaway, folks, owns 14.66% of American Express. So it's no doubt he likes positions that are, you know, basically pretty heavy. You know, and over the course of years, that has held up very well for him. Another one out here is Coca-Cola. You know, inside Coca-Cola, it's not that it's off its high a lot, but when you do have large positions, it can basically hit very quickly. With Coca-Cola, you're talking about 400 million shares. So you can see that, and he owns a lot more than that. But bottom line is that, in fact, so that is on the downside. Let's go on the upside, because I believe Berkshire Hathaway also is into Boeing, and Boeing's been a rocket ship. Let's see. Well, I guess he doesn't. Interesting. Well, let's put it this way. He doesn't own any of the top part of it. I'm down to 0.72 of 1%, and it's not in there. JP Morgan. Let's go to JP Morgan next, because inside that financial sector, JP Morgan would be the next one that you'd be looking at. And what you have with JP Morgan, JP Morgan's off its highs of 63. You're trading out here at 59, 55 right now. What's intriguing here is that also hasn't been able to get any juice on the top side as these markets have gone not only higher, but quite a bit higher. So we'll see where that shakes out. And now, the phone companies. Let's go over to Verizon, VZ. We take a look at some of these phone companies, because what we do have inside the interest rate structure is something that's really intriguing. So Verizon right now pays a 4.5% dividend. Verizon's trading out at $48.77. This little baby here, and this is where I'm going to put this together with bonds in general. What had happened, folks, before the Fed meeting was that Verizon went from a price point of $51. That 51 was traded in November, runs down to 45. Does a bounce up to 48, runs back down again to the 45 level. Now, and it's going to need some cause, you know, to get up to the highs again. But right now, the way this is trading, it looks like Verizon wants to go all the way back to this 51.73 area. What's going to be wild watching this, and this is where you can coordinate and basically match up the correlations in between bonds, in between the S&P, in between high dividend paying stocks. Because what does happen, if in fact rates are going to go higher, you'll see high dividend paying stocks get toasted very, very quickly. That's what you had with Verizon. I suspect that's what we had with Marvell. Yeah, Marvell is the exact same type of setup, by the way. Marvell's trading at $33.85. Marvell pays a 5.5% dividend also. But Marvell also is set up the same way, meaning it looks like Marbell's 33.85. Marbell wants to get back inside this 36, or go after this 36.15. So when you do take a look at that, it's like, oh, this is going to be wild watching how the bond market trades out in these next few days. Because what we absolutely have is that the bonds, well, actually, let's go to the TLT, because the TLT, this is the 20-year plus bond ETF. And the 20-year itself, this has been really a strong ETF. The high that's out there inside the 20 years, 138.50. What we did out here today is that we start turning topside. You're up $1.45, and we'll see if, in fact, you can get back inside the 129.53 area. You get back inside that 129.53 area, that's going to be saying that, hey, guess what? These bonds want to go up once again versus pulling back at all, because they certainly didn't pull back a large amount. What they did do is that the fastness of the move, well, it was quick. There's no two ways about it. When we take a look at the yield structure right now, the 10-year is still yielding 2.057. So bottom line is, if you are out there and you are looking for property, this is still a good time to do it, folks. That's the bottom line. We'll see those 30-year, with the 10-year going at 2%, the 30-year, you're still going to be basically getting a 30-year somewhere about 3.9, maybe 3.8, 3.95. Right in that area right there. That's still a decent deal. And yes, can it get cheaper? It got a lot cheaper about 3 or 4 weeks ago. When I say a lot cheaper, they were pushing 3.75, and with a few 3.7s out there. So that was pretty intense, no doubt about that. Bank of America, BAC. So Bank of America was intriguing out here today. Now, that was a flat market out here today with Bank of America. But what we had inside Bank of America was this, is that you had broker-dealers pushing it, that they've been raised to market outperform. But with all of that happening, you had an increase of 7.4% commercial industrial loans. But what you had is that you had the deposit growth slow. Banks don't want to see deposit growth slow, folks, at all. This is Tom O'Brien. This is TFNN. Our phone number is 877-927-6648. Dow Industrials finished down 23. NASDAQ up 5. S&Ps are flat. We're going to be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We had the Dow Industrials finished down 23. NASDAQ was up 5. S&Ps were flat. And as we do each and every Monday at 20 past the second hour, we have our man, Mr. Chad Coco from TD Ameritrade Think or Swim. And, folks, every Tuesday, right here at TFNN, you can get this right on your cell phone across the world. Chad is the best option show on the planet, sponsored by TD Ameritrade Think or Swim, 12 to 1 Eastern Standard Time. You can get that programming right on your cell phone, TFNN.mobi. If you'd like to get Tiger TV, just go to TFNN.com, and you'll see the banner. It will just say mobile devices. Hit that mobile device banner. You're going to be able to bring up all the charts. Absolutely outstanding. And if you haven't test drove the Think or Swim platform yet, folks, great time to do it. Hit the banner. You can bring up the account. They'll put paper money into the account for you. I use it each and every trading day, whether I'm trading options, futures, commodities, or currencies. It's on one platform. Now, if you happen to be in New York City, in Manhattan, the Traders Expo is going to be there Sunday and Monday, next Sunday and Monday, March 1st to March 2nd. You can come on in. It's on the second floor at the Marriott Marquis. Check it out. Visit Chad, visit JJ, visit the whole TD Ameritrade Think or Swim crew. That evening, March 1st, that evening, folks, 7:15 to 9:30, they're going to walk you through a whole bunch of different strategies, understanding what you can do inside this option market. And, of course, if you can't make it that night, don't worry. They do an amazing job, one-on-one job, actually, with folks that come into the Traders Expo and, of course, clients on a continual basis. Chad Coco, what's going on?
How's it going, Tom?
Well, I'm hoping that it gets a little bit warmer. You know, normally March 1st in New York is pretty good. But
yeah, not hold my breath, though.
I know, man. It's blowing my mind looking at this weather. We're going to be up there, folks, but it's blowing my mind. I'm saying to myself, man, it's going to be 35 degrees out. That's really unusual. So
that's warm for us right now, but yeah, I can imagine it coming from Florida, not so comfortable.
No, not so comfortable at all. So, options. Yep. You know, we have a lot of earnings that have been coming out. You have no doubt this S&P. I mean, it's just relentless. You know, Friday bottom line is that it lays there dead all day, and then all of a sudden you basically go up 30 handles in about a heartbeat, right?
Yeah, I really do. Yeah, right after the announcement about Greece.
Yes.
So we saw a lot of index-based options being traded, and actually that's what I'm going to cover tomorrow, just to try to calm out some of the nerves that people may have with trading some of the options in here.
Okay.
It's a good way to be able to trade a wider basket of stuff just by using these index-based options.
Yes. Now you hear a lot in the financial press, right, that you have large portfolio managers, and every option expiration, as we're coming up to it or right after it, you hear a lot of talk about funds taking out insurance, funds, of course, making, bullish or bearish bets. Talk to me a little bit about how the insurance aspect works so the clients can understand this. If you're, because you certainly don't have to be large funds in order to basically take insurance out on your portfolio.
Right, yeah. So the option controls shares of stock, or if it's an index option, it's cash settled. So it's really controlling a huge amount of cash for a relatively small amount of investment.
Yes.
So basically, you just pick a level where you think that if it drops below this value, I'd be really hurting my portfolio. And you can buy a put on that at that value. So then if it does drop to that value or further, then you're protected and you start making money off of that.
Right. Now, in that aspect, I've heard folks say this many times, and I don't know whether it's a fact or not, but when there's a certain amount of puts and or calls on certain strikes, right, is in order for market makers to get delta neutral, is there a lot of buying and selling going on at those stops, at those price points?
There definitely is, yeah. So if you take a look at the volume versus the open interest, so the open interest is calculated the day for the day previous.
Okay.
You see open interest maybe a third of what the volume was for that day.
Yes.
You can see a lot of intraday trading going on just within the options market, which is kind of interesting to take a look at.
Well, that's really interesting. Here, walk me through that again. So when we're talking open interest, the open interest for today would be Fridays, correct?
Right, yeah. So that's calculated in all the open contracts as the close of business on that Friday.
Which would make sense.
If you take a look at the volume that occurred on Friday,
yes,
especially in the weekly options, you're going to see a much bigger increase in the volume as opposed to the open interest you find the following day.
Okay. And that indicates that, we'll have a bigger trade, but it also indicates that a lot of people were just in there on the daily basis. Would that be correct?
Exactly, yeah. So somebody just potentially a hedge fund or a big guy hedging his portfolio throughout the day, or people just day trading the individual option.
Sure. Yeah, so you can see, I'm sorry, go ahead.
No, so you can take a look at the time and sales. You can watch those orders flow in and out. So you can see like a 2,000 lot option order to buy, and then 10 minutes later see that same thing sell. I wouldn't really consider that as somebody's hedging. That's more along the line of somebody's just day trading that particular option. But then when you see that same order come in and it's not closed out at the end of the day, that'd be more of an idea to give you an idea of somebody's hedging against that.
Yeah, it's really intriguing because what happens, folks, is that, so if you just picture this for a second, the three Qs, okay, are trading, in 108.52, and so 1,000 shares is $108,000. Well, the thing that is amazing is that it's like, you can buy an option at the money right now for $1.39. So it's like, well, yeah, you know, do you want to put up 13,000, right? Instead of 108,000, or do you want to put up 1,300 instead of 10,800, right?
Exactly. Yeah. So a much smaller amount of capital is put up to control a much larger notional value.
You know, it's amazing. You can really see why options are growing so dramatically, because that just seems totally whacked out, doesn't it?
Kind of. I mean, if you think about the way that these products are built and why they're built this way,
yeah,
it kind of makes sense. You just have to get over the initial fear of, oh my God, they're so risky. Really, if you understand the product that you're trading, they're not that more risky than they would be to just trading the stock.
No, you can see that. I'm looking. I mean, when you look at the 3 Qs, the 3 Qs, folks, okay, can move a point and a half easy. Okay, that's not a stretch. And in this case, the example that I had just brought up, you're basically paying 1.3 points for trading something that's $108. So it's like, really? I mean, that's pretty intense, man.
Yeah, penny on the dollar. Then the move there, your percentage change from the value of that option when that increases is going to be a higher percentage than you would have on just buying the underlying.
Yeah, dramatic, exactly. And I guess, and in that context, what may even be more important to many people is that, hey, listen, you only can lose $1,300. Right?
Exactly. Yeah.
You know,
it's a much smaller risk.
Instead of having, you know, 108, well, 10,800 up. If we stay with the same trade, you'd have 1,300 up, and that doesn't mean that you actually have to even get out of it until option expiration. So that defined risk is a big deal.
Exactly. And then even on top of that, if there's a change in volatility, it's going to adjust the price there as well. So you don't even need to necessarily have a move in the right direction. Just have an understanding of what strategy you're using to take advantage of those different types of moves.
Yeah. So when you see folks, you know, now coming into the market, right? Are they much more educated in the option market? Are you still bringing them right from the very beginning and bringing them through the option market?
Yeah, we try to take somebody who hasn't really ever traded options and give them the first step into their options education. We, as you mentioned quite often, we're really good with education here. That's what we're most concerned about, is making sure that our investors really know what they're doing.
Yes.
Before they get in there and get blindsided by something.
Yeah, no doubt.
So we're seeing quite a bit more.
Yeah, no, I can see why. The more that I keep looking at the structure inside them and the liquidity, folks, is amazing. I mean, you know, when we say penny wide, that means that, guess what? You can get into an option of the Qs or the SPYs, 1 penny, 2 penny, 3 penny spread, and that's about as cool as you can get. So if you happen to be in the New York area this coming weekend, it's Sunday and Monday. If you go on the Traders Expo, folks, it says it's Saturday, but the hall actually doesn't open until Sunday at noontime. So it's Sunday, Monday, Marriott Marquis, right in Times Square. If you happen to be out there, come on down, visit Chad, JJ, the whole crew at Thinkorswim. They're doing a special event that night at 7:15 to 9:15. Check it out. Tomorrow, right here at TFNN, 12 to 1 Eastern Standard Time, right on your cell phone, no matter where you are, folks. Chad sets up he has a great program, sets up some great strategies for you so you understand how you can have a defined risk trade on a continual basis using an outstanding platform. Chad, you have a great night, safe night. Look forward to the show tomorrow, and of course, I look forward to seeing you this weekend.
Yeah, same. See you on the weekend.
Okay, man. Have a great one. Have a safe one. And we just need some decent weather coming into beautiful New York City, folks. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow Industrials finished down 23. NASDAQ up 5. S&Ps were flat. We're going to be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. Let's take a look at overseas. First, we'll go to the UK. UK out here today, folks. You're at 69.12, and in the UK, the high was 69.04. That took it out today, stayed over that high. we put this on a weekly basis. What you're going to see is that this has been trying to get over this high. We're talking a long time. The beginning of this consolidation goes back to May of 2013. So this is going to be crucial to watch. That can it basically stay over these particular levels? You know, because that's quite a consolidation. The DAX in Germany. What has been happening in Germany, folks, is that Germany has been leading the market on the way up over in Europe. DAX in Germany right now is at a price point of 11,130, and that level there is not only over the highs. It's the highs of 2000 were 81. So the highs of 2007 were 78. Bottom line is that is over the highs on a dramatic basis. We go over to Asia, because what just did happen in Asia, folks, is that you had the Chinese New Year. Those markets had been closed. If we go to the Hang Seng first, we take a look at the Hang Seng. Hang Seng right now is at 2483. That level out there in the Hang Seng, little bit different. Okay, the highs that go back into 2010 is the 24,900 level. That hasn't got up into the 2007 level yet. We'll see whether that basically can get into that area. Shanghai, we go take a look at the Shanghai index. Now the Shanghai index, no doubt, has been on a tear, then came down, and came down pretty quick. We're at 32.43. Now the Shanghai traded like the Nasdaq did. The Shanghai had a high of 6,100. That was in 2007. Came down hard, down to 1,600. It did a nice counter trend bench to 34. So 3,400, 3,454 is the number here on Shanghai. The way Shanghai is coming into that number, it's saying, hey, it's going to take it out. So this is going to be really intriguing watching the Chinese market in particular. Why? Because the Chinese market, folks, hasn't moved. The last 3 months, excuse me, folks, 3 months ago, that's where the large movement occurred. It almost went up 20% in 1 month. It's pushing against that swing point of the 34.76. You break that 34.76, and then it's really going to have a shot for a lot higher price. What does that mean? That has implications inside the commodity business in a big way. Commodities themselves have got killed for quite a period of time, whether we're talking copper, whether you're talking the metals, whether you're talking iron ore, or whether you're talking the soft, when we start talking beans and all of this. Inside the Chinese market, what you want to keep your eye on is, I would say, copper in a big way. Why? Because what we have had is that as they're building out, folks, the base metal market is something that they need in an extraordinary way. Now, what they're very good at is that they're good at buying low, holding that for long periods of time, and it looks to me like the way that copper is setting up right now, copper's at 259. That is down in the last 6 months from the 330 area. Not that that's a huge amount, but the high that was generated out here a year ago was 326. So you're at 259 right now. The way this little baby is setting up, it looks like it's trying to build cause to basically get into the price point of 272. So we'll see where that shakes out. What just did happen is that BHP Billiton, okay, which BHP, folks, okay, which is one of the largest commodity companies in the world, okay? You're talking everything. You're talking iron ore, gold, titanium, nickel, copper concentrate, petroleum. Bottom line, this is a stock that has also got killed, yet they just come out with their numbers about 10 minutes ago. This is a stock traded at $49 right now. This has gone straight down from the $80 level, and we'll see whether it gets any juice into it tomorrow morning. Thus far, it's not trading. It's at $49.55, but they made big money. They made a lot more money than the analysts thought they were going to make. The estimate, now I'm talking profit, the estimate was $4.89 billion. They came in with $5.35 billion. And what that's all about is that what happens with commodity companies in general is that what they can do, they have certain patches of rock. And certain patches of rock, folks, are worth more than other patches of rock. And I expect what you'll see when you start looking inside a few of these, probably BHP, the same deal, is that they start producing better parts of what their backyard is. That's what I expect you're going to see out here. Does that matter in the longer sense? In the longer sense, yes, you use some of your reserves up. In the shorter sense, however, what happens is that the market is going to basically reward or not reward folks on the amount of bread that's made. So, and we'll see if the demand structure actually goes up. It looks to me like when we talk steel, when we talk iron ore, right now it looks to me like that little baby has bottomed out. What we did have out here in the gold and silver market this morning, that rejected lower price, had lighter volume, they turned flat. The spread inside gold today was nice, about a $20 spread. That area of the 1180, 1185, that's what it costs to get it out of the ground and get it to each one of us. I suspect each and every time we're going down to that level is rejecting it. King dollar is still the number out here. King dollar hasn't been able to get up and into that high, and that's telling me that King dollar still is topping out right here. The euro wants to get a bounce. King dollar wants to pull back. And the real key on the King dollar pullback would be, as we go after the February 3rd low, will there be volume in King dollar, meaning people are selling it, on the way down? You know, we'll see how that baby shakes out. What that would set up, of course, is that would set up a bounce inside the euro. You can see the Greece situation, folks. The Greece situation is going to be put off forever. That's, you know, it's going to shake the market, shake, rattle, and roll, but they're just going to keep fast forwarding that baby. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Thanks for being here, folks. Have a great night, safe night. Look forward to speaking to you right here tomorrow. Go get them, folks.